for joining us on this edition of Business Daily. I'm Lee Ji-yoon. Before we get started, let's first get a quick check of today's highlights. The Bank of Korea unexpectedly cuts the country's base rate to a new record low in a bid to bolster the sagging domestic economy. We talked to an expert about this. Korea's top conglomerates are helping their own employees give life to creative ideas by fostering startups within, creating a win-win situation for all. These stories and more coming right up. It was a surprise rate cut by the Bank of Korea today, putting an end to almost a year of holding rates. This decision comes as part of the bank's efforts to boost the economy, especially in the face of the government's corporate restructuring drive. Our Hwang Jae starts us off.
It was a bolt out of the blue that few were expecting. The Bank of Korea on Thursday cut its key rate by 1/4 of a percentage point to an unprecedented low of 1.25%. The unanimous decision came as the economy has seen its traditional growth engine exports fall sharply for almost a year and a half.
We believe there are considerable downside risks in the second half of this year. The slowdown in global trade is greater than we had forecast in April, and downward pressure could mount as the government's corporate restructuring gains momentum.
But the top central banker brushed aside speculation that the rate trim is aimed at facilitating the process of corporate restructuring, adding that it was a preemptive move to tackle the low growth trend. And experts say it would have been now or never for Korea's central bank to cut the rate, as the worse than expected U.S. jobs data in May tempered forecasts of a rate hike by the Federal Reserve in June, in return giving leeway for the BOK. Maneuvering the rate against the Fed's interest rate plans has prompted fears of massive capital outflows in emerging markets, and Korea is no exception.
It's a matter of when, but considering the Fed will likely raise its interest rates in the second half of the year, June may have been the appropriate month for Korea's monetary policymakers to go with a rate cut decision.
The governor emphasized, though, a rate cut itself will not put the economy back on track to a solid recovery, and that fiscal policy, as well as structural reforms, should also follow. Concern over further exacerbating household debt is another thorny issue that the central bank will have to confront. Despite the potential negative effects of a lower rate, Governor Lee left the door open for additional cuts, saying all options still remain on the table for possible scenarios ahead. Hwang Jae, Business Daily.
And to tell us more about this, Professor Shin Se-don of Sukmyeong Women's University joins us on the phone today. Thanks for taking your time to talk with us today.
Good afternoon.
All right, so amid the ongoing corporate restructuring drive, the Bank of Korea has lowered the benchmark interest rate for the first time in a year by 1/4 of a percentage point to 1.25%. What do you think is the biggest reason behind today's rate cut?
I think the sluggish economy is the main reason on the one hand, and also the doubt about the possibility for the Fed to raise the rate has been in the cloud. So prime reason for the decision, unanimous decision today, I think, is the sluggish economy on top of failing exports and ailing investments and struggling demand. I think it is the prime reason for the decision behind.
Now, how much of a lift do you think this will give the country's economy then?
Well, it would have some positive effect on the construction and facility investments, but would have a very little effect on consumption because it would deteriorate interest rate income on the $200 trillion worth of banking deposits. So on the one hand, it might have a positive effect on investment, but I think generally it would not have a significant effect on the national demand because we have lowered recovered about 5 times in the previous times, but the data show that not much significant improvement in the demand. So I think not much of an effect would have economy other than kind of a psychological effect, kind of boost up investment sentiment.
Now, this unexpected decision took markets by surprise. How are markets reacting to this latest announcement?
Well, at the start, the stock price rose rapidly, but after the noon, the price has been falling into the negative region. So throughout the day, the stock price fell about 2.9 points. And exchange rate also, fell by 1%. 1.1. So, despite surprise to many analysts and academicians, the market took it not much of a surprise because the financial market was stable throughout the day.
But there are also concerns that Korea's household debt problem could get even worse. Would you agree?
Well, the banking industry realizing the possible risk concerning the non-performing asset, a non-performing loan to the house borrowers. So from the start of the year, the banking industry has begun to scrutinize loan practices. So with that kind of a very prudential and a very careful loan practices, I think the lowering interest rate would not have increased the risk on the household debt. So household debt, I think, is not a significant threat for the decision.
Then what about the risk of capital outflows, especially considering that the U.S. Fed has yet to carry out another rate hike, but is largely expected to do so in the coming months?
Yeah, that is. I think that is the most significant, worries that we have been emphasizing that there will be little room for the Bank of Korea to lower the rate because it is almost certain for the Fed to raise the rate probably June or possibly in July and downward throughout this year. So there are plenty of chances that the Fed will raise the rate at least a quarter or half a percentage point. And with that 1/4 percentage discount, the cut in the Bank of Korea, the gap between the U.S. rate and Korean rate has dropped to almost 3/4 percentage point now, and it will go down to half a percentage, and that will have a tremendous effect on capital outflow from Korea, exactly as it happened 2006, 2007. In those two-year period, exactly $100 billion worth of capital outflew from Korea, and that eventually led to 2008, the subprime mortgage crisis in Korea. So that is the point that I am very much worried about this decision.
Now, shifting our focus a little bit, what about the upcoming Brexit referendum? There's a lot of market fear ahead of the vote. So how do you think that outcome of the vote will affect the Korean economy down the line?
Well, if UK decided to get out of European system, it's going to be a major earthquake with the magnitude higher than 6 or 7. I think it is going to be the most devastating and unstable financial blow to global financial market. So I hope that would not materialize. But if UK decides to do so, nobody can expect how big of an impact will it be on the financial market, stock prices, interest rates, exchange rate. I am so shocked about the possibility of potential UK out of European system.
All right, we'll definitely keep an eye on that. Thank you so much for your insight today, Professor.
You're welcome.
Korea's finance minister says it expects to see improved economic performance in the second quarter of this year. At a meeting of economy-related ministers on Thursday, Finance Minister Yoo Il-ho said the economy has shown modest recovery from the weaknesses recorded at the start of this year. Pointing to the upward revised first quarter GDP, Minister Yu said the trend should continue given the effects of the front-loaded national budget, the temporary holiday in early May, and a tax cut extension on vehicle sales. But he indicated that he was still concerned about the state of the private sector. Employment is set to be hit as manufacturing slows on the back of stubbornly sluggish exports. He committed to fully achieving restructuring and industry reform, which he said were the only fundamental solutions to sharpening the country's competitiveness. The government has announced a 5-year plan to boost the cybersecurity sector as the Korean society is becoming more and more dependent on information and communications technology. Our Kim Jae-yeon has the story.
ICT development has become intertwined with a broad range of civilian sectors, including medicine and traffic. But behind the technological advances are an increasingly broad range of cybersecurity threats. The economic losses stemming from cybersecurity threats in Korea alone are estimated at more than $3 billion a year, more than double that from natural disasters. To address these issues, the Ministry of Science, ICT, and Future Planning has come up with a 5-year plan to boost the country's cybersecurity sector. Under its KICT Security 2020 plan, the ministry says it will support industries related to cybersecurity, including the medical, energy, transportation, manufacturing, and home appliance sectors, to build up cybersecurity functions during the product or service development stage. The ministry will also devise plans to support the development of smart surveillance cameras, bioforensics, and video analysis based on big data in the future. In addition, the ministry will help build up a K-security brand for cybersecurity exports to Tanzania, Oman, Indonesia, and Costa Rica, deemed as strategically important regional gateways. The ministry believes nurturing the cybersecurity sector, which it views as a new growth engine for the government's Creative Economy initiative, could help create more than 100 cybersecurity startups by 2020 and produce 19,000 new jobs in the process. It also says the plan could help triple Korea's cybersecurity exports from the current volume to more than $3.9 billion by 2020. Kim Jae-yeon, Business Daily.
Korea's cosmetics industry has reached a new milestone. Its production last year reached and surpassed the 10 trillion won mark. Specifically, its net production came in at 10.7 trillion won, which is about $9.3 billion. According to Korea's Ministry of Food and Drug Safety, the rise was thanks to increasing exports, which surged by nearly 44% compared to the year before. China was by far the top outbound destination for Korean cosmetics last year, followed by Hong Kong, the US, and Japan. By company, Amore Pacific and LG Household and Healthcare produced over 60% of the country's cosmetics last year. Samsung Electronics is expected to see strong sales of its Galaxy S7 series in the second quarter. According to industry sources on Thursday, Korea's #1 tech firm is forecast to sell about 15 million units of its newest smartphone models in the April to June period. Local securities companies upgraded their second quarter earnings outlook for Samsung, predicting its operating profit to soar to nearly $6.7 billion. Analysts say the profit rate of Samsung's mobile segment is set to rise from 15.8% to over 17% in the second quarter on the back of strong sales of the Galaxy S7 series. At a time when fostering new growth engines has become one of the main priorities for large firms, some companies are giving their own employees the opportunity to capitalize on their creative ideas. Our Lee Joo-young tells us more.
This is TipTalk, a watch band that lets users have phone conversations just by placing a finger on the front of the ear. Created by 4 Samsung engineers, they spun their invention into a startup company under Samsung's umbrella called 이놈들 Lab.
After working at Samsung for a year, I was able to take that technology and create a startup with a more stable foundation, working with previous colleagues.
이놈들 Lab is just one example of a full-fledged startup created by Samsung's Creative Lab division. It's one of the tech giant's innovation programs that help employees nurture their own creative business ideas. As a result, 9 projects ended up joining the market as independent entities last year, and 5 more are aiming to release their first batch of products sometime in the second half of this year. Following Samsung's lead is LG Electronics, which also launched an Idea Plant program that offers roughly $8,500 in subsidies for each project. A-Canvas, a digital frame that lets users access millions of artwork, is just one result.
LG will support them by providing patented technologies as well as counseling from startup experts.
Market watchers say large firms will continue to incubate startups created by its own employees to foster a creative corporate culture and give entrepreneurs an easier way to commercialize their technology. Lee Ju-young, Business Daily.
And that wraps it up for today, but we'll be back tomorrow with more, so hope to see you right back here for your latest edition of Business Daily. Until then, goodbye.